Hello everyone, welcome to today's US Open Live webinar. It is Tuesday, March 28th, 13:20 GMT, 10 minutes before US markets open. I am your host, Nikos Zavouras, Senior Market Specialist at FXCM. It's a relatively slow start to the week after recent high-profile events and news. It seems like sentiment is relatively good following renewed fears around the banking sector on Friday as pressure moved to Deutsche Bank, but we saw reassurances by many officials, although there are still also other factors to contemplate, such as renewed geopolitical tensions. Before, however, we delve into all of that, as always, please read carefully through the warnings and the disclaimers, and then we will get started. Okay, let's get the ball rolling as we're watching Euro USD. Let's go over a recap of what we have seen since our last session on Thursday. We saw late last week banking fears being renewed after Deutsche Bank came under pressure, but it looks like those fears have now ebbed again. The banking giant, the German banking giant, has a strong financial, starting with a net profit of 5.6 billion euros in 2022, which is the highest since 2007. Furthermore, German Chancellor Olaf Scholz noted that Deutsche Bank has modernized and organized the way it works, and said there is no reason for concern around it. Furthermore, in a joint statement on Friday, leaders of all 27 European countries stressed that the banking system is resilient, and I quote here, resilient with strong capital and liquidity positions. Now, over in the US, Silicon Valley Bank, whose failure initiated this market rout that we have seen, was sold to First Citizens Bank at a steep discount, and also we got some reassurances around the banking sector from US authorities. On Friday, the Financial Stability Oversight Council stated that the banking system remains sound and resilient. Overall, this thing seems to have sort of helped improve sentiment, although it's probably too early to say whether this recent turmoil is over. Now, other than that, there have been recession fears due to this credit tightening or potential credit tightening. We don't know yet to what extent this will materialize, although the Fed does seem to think there will be some tightening of conditions. And Minneapolis Fed President Neil Kaspari noted in a CBS interview based in the program Face the Nation on Sunday that such an outcome is closer right now due to these developments, meaning a recession. We also had some geopolitical tensions being heightened after Russian President Putin announced plans to station tactical nuclear weapons in Belarus. NATO response seems to be somewhat muted. A spokesperson for the Allies talked of dangerous and irresponsible rhetoric, but it also said that allies have not seen any changes in Russia's nuclear posture. So these are the factors that markets are contemplating this week, since late last week. And how does this translate into market moves? Well, mostly subdued due to a lack of big catalyst, because we come from a long period of multiple and high-profile events. Now on Euro USD, not much has changed since our last analysis a few days ago. We talked about how the divergent monetary stance between the ECB and the Fed is supportive of the pair, and that still stands. It did face pressure late last week around Deutsche Bank and the risk-off sentiment we saw there, and of course because the move was stretched as we had indicated. In any case, this still creates risk for a test of the 200-period EMA, but a breach will require a catalyst, and in any case, we don't see sustained weakness below 1.05, 1.0416 in this region here as something that would be justified under the current policy setting by the two central banks. In any case, the common currency finds renewed vigor today, and it seems on track for higher highs, although a convincing move above 1.1067 may prove elusive in the near term, but in any case, it looks like bulls are in the driver's seat once again. Now let's move over to the DAX, the German index. Here we are. Made a strong start to the week as banking fears eased after the reassurances from European officials that we talked about. This keeps the road to 15,739 open and for new 2023 highs, but we need fresh impetus for that. On the other hand, it does struggle to clear the 200-period EMA, and once again it is contained by the daily Ichimoku cloud, while the ECB's hawkish stance is a drag. That keeps it vulnerable to the broader 14,500 region. Here there are some key technical levels there, but doesn't remain cautious for further loss below these levels. And as we approach towards the US Open, let's talk first a little bit about US oil, and then we will move over to the Nasdaq. US oil extended its recovery from the recent plunge. Here you can see this recovery, and actually had a relief rally on Monday, and tries to take out this key resistant area we have highlighted recently. Successful effort above the 200-period EMA will send it towards 76.99, but previous visits above the 200-period EMA have been short-lived, and in any case, it doesn't inspire confidence at this stage for further advance towards the 82, mid-82s over here. Despite the recent rebound, the commodity remains in a precarious position as long as it does not clear the 200-period EMA, and there is still scope for sub $70 per barrel moves. but this region down here at from around mid 62s to mid 61s appears to be distant at this stage. And let's round things off with the Nasdaq. Nothing has really changed from what we have been discussing recently. It made the cautious start to the week on increasing chances of recession due to the banking rout. There is still scope for a slide towards the 200-period EMA and the upper border of the daily Ichimoku at around 12,320, 12,270, but it appears to be well supported below that region and has shown remarkable resilience during this period of turmoil, partly, of course, here by the more conservative approach of the US Federal Reserve. Bulls are clearly in control at this stage and have the ability to take this region out, 13,000 to 10, although we are cautious for even more strength that would tackle 13,007 to 4. It's a bit of a tricky week, I would say, this one, not just for the Nasdaq, but pretty much for all assets, as after a series of high-profile events, there is no catalyst, at least at the beginning of this week. Although towards the end of it, we do get some important news. So now in terms of what's ahead, it's a light calendar. ECB President Lagarde should be speaking soon. We don't know, of course, if she's gonna say anything new, but I would doubt she would be far from what we have seen recently, which is mostly hawkish in support of further tightening, if, of course, data come in as the central bank expect them to. Then Wednesday is pretty much light, and on Thursday before next session, German CPI inflation and US Q4 final GDP will be in the spotlight, and we will discuss their outcome in that session. So that's it from us for today. We'll talk again on Thursday, same time, 13:20 GMT, 10 minutes before Wall Street opens. Thank you for joining me.